Ladies and gentlemen, welcome back to the channel. Right at the about same exact moment you are watching this video, we are going to be getting some earnings coming out. I will let you know which ones are important, which ones to be watching for, and two very notable names that I think are important, especially for your AI trade. So if any of you guys are in any kind of AI trades like NVIDIA, SMCI, the whole likes, ARM, well, how can we not put that one in here as well, given the rally that we've seen last week? These two earnings will be vitally important to pay attention to. So I'll give you the rundown of what's going on with that situation, as well as, most importantly, the data coming out tomorrow morning and my expectations there. We are going to be getting CPI, and CPI is going to, well, potentially lie to us again. We'll see. And it could move our markets big time. It's already moving our markets today, and I'll go over a little bit of the dilemma that we're seeing right now in different sectors of our markets. So hit that like button as well as subscribe to the channel. Let me know what you think about this information down below in the comment section. So first and foremost, I just want to say a very strong day for AMC stock. AMC stock up about 6% today, trading at $4.64 at the time of recording this video, up about 26 cents here on the day today. Now that's going to get a whole lot crazier potentially to the upside coming tomorrow, or it's going to be a very rough day for everyone out there. Okay, let's just be honest. If tomorrow is bad, if the data is bad, well, it's going to be a really, really, really rough day out there for stocks, because I mean, we're just not expecting that. We're just hoping not to see a bad data report tomorrow. So tomorrow, okay, you're going to get CPI. So this comes out at 8:30 in the morning. For your core month over month, that's the most important one. You're expecting 0.3%. I actually think this could come in at 0.2%. On a big shocker, 0.1%. I don't think 0.1% is impossible. I just want to say that. 0.2% seems more likely than 0.3% to me personally. But I could be wrong, right? And if we come out at 0.3%, I think we get a plus or minus, half of 1% move either direction in the markets. Probably an upwards kind of direction. I'm more upward biased right now, at least for maybe some of the small cap stocks, because Jerome Powell made it clear, as long as we don't see a sharp uptick in inflation that's like sustaining and keeps going higher, we've seen a lot of progress, enough progress to start the process of cutting rates. But if you come in at 0.2 or 0.1% somehow, I mean, oh boy, that is going to be a very, very bullish thing. Now, core inflation year over year expected to come in around 3.8%. I think this could come in around 3.6%. That's just my personal opinion. Some estimates are around 3.7% or so a little bit on the low side. And I do think you could even undershoot that at least a little bit. Now, headline month over month, that's expected to come in at 0.2%. That was the same as last month. It was revised. Initially, we got 0.3%. It was revised down on Friday to 0.2%. So we're expecting another 0.2% rating. That's 2.4% on an annualized basis. Not a big deal. That is perfectly manageable. Okay. So that's something that I'm not really too concerned about. I don't think the markets are going to care at all. And really, in the grand scope of things, the Fed cares about PCE. They even made that clear on Friday. They said, we cannot control, other factors. Jerome Powell made that clear even on 60 Minutes, that he cannot control other factors that go into the CPI rating. But PCE really is the basket of inflation that we are feeling on a day-to-day basis. Now, we will not get PCE this week. I believe that will be coming out next week. So even if we get a slightly hotter inflation report, I'm not convinced that it's going to be the end of the world for the markets either way this thing goes. I think there's potentially more optimism that could come out of tomorrow, especially for your small and mid cap stocks, given what we're seeing today, and we'll talk about it here in just a moment, rather than pessimism and, some kind of big market, downside shift. I don't think that comes tomorrow, in my personal opinion. Now, I do think areas of the markets definitely need to see a little bit of a reset, and that is specifically your AI names. And I mean, strangely enough, if you do see a big downside surprise on CPI, if CPI comes in lighter than expected, you may actually see the indexes not do much at all. If people want to sell an Apple, sell a Microsoft, sell an Nvidia, because they don't benefit from a more aggressive rate cut regime from Fed Jerome Powell. They just don't, right? They don't benefit from it. But your small mid cap stocks, they do. So Wall Street loves to front run these things. And if it looks like the trade is small and mid cap stocks, they're going to front run that. And they're already front running it today. So it's not like this is a speculation. It's literally happening today. Now, if you look at year over year CPI, you may come in under 3% for the first time in quite a long time. You're expecting 3%. You could come in at 2.8, 2.7%. That's what some people on Wall Street are speculating, although the estimate, some estimates are as high as 3.1%. I do think you probably come in under 3%. So I'm overall pretty optimistic we are going to get a better than expected inflation report, but there's always a chance that I'm wrong. Keep that in mind. Now, to my point that I just made, you're already seeing front running in our markets. Now, even when you look at just Bitcoin, right? Bitcoin extends its gains, breaking through the 50,000 level. I actually got a notification on my phone that my Ethereum was up a lot today, which fits in this narrative that we're seeing, where the Russell 2000 is up about 2% today. The NASDAQ is up less than half of 1%. The S&P is up 0.41%. You are seeing a 4x outperformance in the Russell 2000. So money is definitely going into small cap stocks. Now it doesn't take a whole lot of money going into small caps to move the Russell 2%. I mean, just for a little bit of context here, the entire Russell 2000 is almost the same market cap as Nvidia. After today, I believe it is the same market cap, roughly, as Nvidia. So it doesn't take a lot of dollars going into the Russell to get it to move like we're seeing today, especially when it's at pretty low prices. After all, the Russell 2000 is the only index that has not hit all-time highs out of the major four: the Dow, the S&P, the NASDAQ, and the Russell 2000. You're still quite a far ways off of all-time highs for the Russell 2000. The Russell 2000 is actually still in a bear market. It's still down 20% from its highs. And I do think you could start to see a broader rotation in our markets, especially if CPI is good tomorrow, because essentially markets like to price in like the first rate cut about 3 months before it happens. And I mean, if we're midway through February, March, April, May, 3 months away, we're going to be getting our first rate cut. And that is what markets are currently expecting. And we'll take a look at, probabilities for Fed policy actions here in just a moment. But the other disparity you're seeing today, which is kind of weird in contrast with the bullish trade on the Russell 2000 today, is a lot of puts being bought on the S&P 500. Which really makes me wonder, like, what in the world is going on? Maybe the trade here is puts on S&P, long on NASDAQ, or long on Russell, because if you have a better than expected CPI report, Russell's going to outperform. If you have a bad CPI report, well, maybe the S&P is going to fall quite a bit. And then maybe the Russell falls as well, but you've already seen a lot more carnage in the Russell lately. So it's a very interesting trade. Now, you can also make the argument that if your big tech names do not benefit from rates going lower from better than expected CPI on a fundamental basis, like the Fed cutting rates for Nvidia does nothing. The Fed cutting rates for Microsoft does nothing. But for a Fubo, for a PayPal, for some of these other stocks, maybe that are incorporated in the Russell 2000, that are smaller cap names, the Fed cutting rates is like everything. About 30% of Russell 2000 debt is variable. So based on Fed policy, or really where the 10-year treasury is, and the Fed affects the 10-year treasury. So yeah, maybe you could make the argument that if people are buying puts on the S&P, even if we do have really good inflation numbers tomorrow, the S&P could actually fall because you could see outflows from big tech and money could go into the Russell. And that's why people are going long the Russell, buying puts on the S&P. And I'm saying buying puts on the S&P because when the VIX goes higher by almost 6%, there's a lot of puts being bought on the S&P 500, especially when the S&P is green. That's just something you typically don't see all too often. Okay, that's a pretty rare occurrence to see the VIX up this much, the Russell up this much, and the S&P just barely treading water. Now, the equal weight S&P is doing a lot better here today as well. But if we take a look at what the markets are pricing for Fed policy using the Fed Rate Monitor tool, you guys can use this for yourselves. It's a free tool. Highly recommend you guys do this. For March, 14% chance of a cut, 86% chance of a pause. So no cut is coming in March unless, maybe inflation does come down really fast and maybe we do start to price in a cut in March. That's certainly possible. We have heard some Fed presidents, some regional Fed presidents that have said they don't want to rule out a cut coming in March. But again, it really depends on that CPI data. Now for May 1st, that's when you're expecting your first cut. 52.3% chance of a cut, 40.2% chance of a continued pause, and 7.5% chance of 2 rate cuts by May. So nonetheless, that's what we're looking at here in the near term. For December, we're pricing in 1, 2, 3, 4, 5 rate cuts still for 2024. I personally think that's a little bit on the high side. 2 or 3 rate cuts seems a little bit more appropriate to me, but it really just depends on the course of inflation. Let's be honest here. Now, if we take a look at the option activity for AMC stock today from hedge funds and institutions, still the same one order, about $72,000, 100% positive order value. It is a June 21st $4 call. And they're paying about $1.50 a piece for these. So $150 a piece, whichever terminology you like to use is cool with me. But that would be a break even of about $5.50 per share for AMC stock on that specific trade. Now, volume today about 75% to the call side, 25% to the put side, 3-to-1 ratio, 3 times as many calls being bought compared to the puts. Open interest, 70.5% to the call side and 29.42% to the put side. So looking pretty good there as well. So there you have that. Let's take a look at the stock twit sentiment barometers for AMC. You're bullish today at 73, a little bit higher than yesterday's number of 72. The message volume is a lot higher than yesterday. Yesterday you were at 9. Today you were at 44. And participation ratio is normal at 50. So that's actually really, really good news because the participation ratio, being normal or potentially even going into the higher extreme high side, that is really, really good. That just shows more people are looking at AMC. More people looking at AMC potentially means more buying into AMC. Now, I showed this calendar over the weekend. Take a screenshot or go to Twitter and look up earnings whispers for yourselves. These are the most anticipated earnings releases. They're not going to be all of them, but these are your big stocks that markets will care about. These stocks have the most analysts covering them. If there's a stock that's not on here that reports, it's usually not a stock worth watching. That's just the way I look at it. Monday, your Arista. So today in after hours, Arista Networks and Cadence Technologies. These are the 2 big AI names that both hit all-time highs today, but before coming down. They're both up huge recently, like even since the start of this year. Arista Networks does a lot of the connections for data centers. So connecting like GPUs and CPUs, the actual connections there. And they do some cybersecurity stuff as well. They're partnered with Zscaler to make it like end-to-end encryption. So it's safe, right? But they actually handle like the Ethernet side of things. Because, I mean, let's be honest, you need a lot of internet capabilities to run a huge data center, essentially warehouse. So that's what Arista Networks does. Cadence Technologies uses EDA machines. I'm not an expert on this field, okay? But I believe it is the actual like machines that creates portions of like GPUs, okay? So they've both done really, really well. But they've done so well that it's like, are they going to go higher from here? Probably not. My personal opinion is they probably both fall after earnings. Even with really good earnings, they're going to have to come out and shock Wall Street with something huge, in my opinion, to continue on this run. It just doesn't seem logical to me. But hey, anything's possible, and you know, this likely will have some kind of effect on Nvidia, especially Cadence Technologies here. So those two earnings will report. Then you got a bunch of other stocks reporting this week. Coinbase, another interesting one. Roku, the Trade Desk, DraftKings Thursday after hours, DoorDash, Toast, Opendoor, Applied Materials, Wednesday after hours, Twilio, Oxy, Cisco, Fastly, HubSpot, Upwork, and QuantumScape. Tuesday after hours, Airbnb, Upstart, Robinhood, Lyft, MGM Resorts, and Instacart. And tomorrow morning, you will get Shopify, Datadog, Coca-Cola, Biogen, Marriott International, Hasbro, Moody's, AutoNation, and some other smaller names as well. Datadog could be another interesting one because they have rallied so much here recently. I think a good breather or consolidation phase for AI names could make a lot of sense here. So let me know what you think about this information down below in the comment section. Again, if CPI does come in better than expected, I do think AMC stock could probably have a 10+% day tomorrow. I don't want to get everyone too excited, but it could be pretty exciting nonetheless. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.